WellPoint CEO Angela Braly resigned given pressure from unhappy investors. The G7 countries called for oil output to be increased as Hurricane Isaac and Iran tensions pushed up prices. I'm Lindsay Bell, and the morning call starts right now.
Good morning. Who am I? I'm Scott Redler. Who am I?
Scott Redler, Chief Strategic Officer.
Who's about to be going on vacation, so I'm already in vacation mode. So anyway, I am the Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. The market looks like it's opening. I'm on vacation too. So futures are pointing to another flat day, which, 6 of the last 7 days we've been down. The market's been down on light volumes, but some of the leaders are hanging in there. What's your game plan?
Well, everyone wants to focus on, we've been down 6 out of 7 days, but meanwhile, we're still about 1.5% off the highs. So the question is this, okay, we're heading into Big Ben's speech on Friday. We have the ECB coming out next week. The whole thesis that people have been talking about this year is growth slowing. And there's been data supporting it, obviously, around the world. So there are a lot of bears out there growling, but if that's kept you out of the markets, which has been an unbelievable year where both the NASDAQ, the S&P, everything's up over 10%, you're not doing so well. So the bears think they're going to get vindication right now because Big Ben's not going to deliver, or Europe won't, they're going to jawbone and not do actions. So if that's going to happen, there are levels to watch to figure out, if we're going to break or we're not going to break. And that's what I'm looking at.
Exactly. I don't think you need to be full-fledged risk on here right now. So why don't we take a look at the chart zone, look at the levels that you're watching.
Well, if you take a look at the S&P, you'll see that since the June 4th lows, we've had a very methodical move, right? Higher lows the entire way, all the way up to finally, a bit of an outside day last week. But where are we right now? We're still right around the 8-day, above the 21-day. This is my plan right here. As long as we stay above 1398, short-term composure is still intact. We can even come down and test the 50-day around 1370 and still be okay and be somewhat in the same trend we've been in since those lows. For me to turn really bearish that we're going to see lower prices, a lot of guys are talking 10, 15% corrections, we're going to have to break this level or break this level. So until then, stick with stocks. There's a lot of great leaders out there, a lot of strong sectors, and don't be such a naysayer.
And for the concerns over slowing growth, we are seeing that the retail sector has actually been really strong. Yesterday, the RTH hit a multi-year high.
Yep, multi-year high showing you can pick relatively strong sectors. You look at the RTHs right here, big group, boom, at the highs. We've had many different buy prices along the way, and it's continued to go higher. This was one breakout that pulled in and continued, and we're above the 8-day, we're above the 21-day. You look at the home builders, still a lot to like there. Almost at highs, above the 8-day, above the 21-day. You look at the Qs, technology, right around the old highs, holding the 8-day, and typically strong stocks hold their 8-day and 21-day, not indices. So at this point, bulls might be a little spoiled, but there's still a lot to like, and you can make more money being long versus short this market.
Yeah, exactly. You got to be a stock picker here. The consumer staple space also, it had a pullback last week, but it's still pretty strong. And if you're concerned about the market for sure and slowing growth, this is a group you might want to consider getting involved in.
Yeah, and this one isn't having a blockbuster move. It's a bit more conservative, but also above the 8-day, above the 21-day. Stocks within that group are also providing alpha if you pick the right one. So again, having that equity plan has been making sense.
Well, we're going to get into all this in a lot more detail in the long form version, so be sure to stay tuned for that.